G'day gas enthusiasts, another almost a daily update on the natural gas prices and its ETFs. Now we've had a bit of a retrace yet again after hitting some resistance over the last couple of days. Before we go any further, make sure you hit that like and subscribe button to support the channel. So in terms of the today's outlook, January 18, natural gas prices are experiencing volatility due to increased demand from AI data centers, fluctuating production levels. Analysts anticipate US natural gas price will average 3.32 per million BTUs in 2025, with significant contributions from AI data center growth. In terms of the ETFs, ProShares Ultra Bloomberg Natural Gas (BOIL) seeks to deliver twice the daily performance of the Bloomberg Natural Gas sub-index, making it suitable for short-term bullish positions. ProShares Ultra Short Bloomberg Natural Gas (KOLD) aims for twice the inverse of the daily performance of the same index, catering to short-term bearish strategies. The United States Natural Gas Fund, UNG, invests in natural gas futures contracts to reflect the daily changes in percentage terms of the price of natural gas delivered at the Henry Hub. In terms of the AI data center impact on natural gas demand, the rapid expansion of AI technologies is significantly increasing energy consumption in data centers. Projections indicate that AI could drive a 160% increase in data center power demand by 2028, with AI representing about 19% of this demand. This surge is expected to add approximately 3 to 6 billion cubic feet per day of natural gas demand by 2030, potentially exceeding 10 BCF/D as data centers seek reliable and continuous power sources. So as always, we look at the long-term trends first. We've got the monthly here, the weekly and the daily. And for those new to the channel, we've got these moving averages on the price chart and also the moving averages on the CCI 150, and those can be found in the description below. There's a video you can reference and learn how to draw those on your own charting software. On the monthly, the price is broken above those moving averages, giving us a bullish signal. Likewise, the CCI. There's no divergence on the monthly. On the weekly, likewise, it's been now bullish since around mid-September on the CCI and the price moving averages. So again, another bullish signal. On the daily, we've had this hit this resistance up here at 40.60, and it's been hovering around this minor resistance at 38.78. We've had a bit of a pullback in the last day of trade for the week, and you can see there the CCI is also broken into that moving average range, giving us a neutral positioning. So it looks like it may possibly come back towards this diagonal ascending trend line, and if it breaks through that, then the next level of support will be this horizontal at 32.16 or this diagonal. So we'll keep an eye on that and see how it goes. But at the moment, we also had this bearish divergence, slightly lower lows on lower highs on the CCI versus higher highs on the price, and it's actually pulled back. Nothing dramatic. It's been going pretty much sideways since then, so nothing really dramatic about that bearish divergence. On the intraday, you can see more clearly the pullback after hitting that, broke through that minor resistance. We've also got a minor bearish divergence on the 1 hour chart versus higher highs on the price, and that's actually pulled back. So if we drew a Fibonacci between that high and that previous, we'll take it back to that low there. You can see there it's actually just reached that 50% retrace level. And as I said, it could actually fall further, and if it falls below that 61%, the next level of support will be this diagonal ascending trend line. So I'll just keep an eye on that. Also, if you're interested, I've got another indicator that's in the description below. It's a multiple indicator. It covers MACD, stochastic, RSI, CCI, and moving averages. And basically, whenever this indicator breaks above the +2, as per those spikes, I've indicated that with a blue arrow on the chart, indicating a potential reversal. Or if it breaks below that -2 on this particular graph, I've indicated with these red arrows, indicating a potential reversal to the downside. So this is the daily chart, and it works better on the longer term time frames. But you can see there it's had a bit of a bearish arrows during these peaks, and then a bit of a pullback. Doesn't show the any bullish arrows at this point, but at the moment the last bearish candle was there, and that also coincides with the CCI breaking below the moving averages on that one there. So again, nothing too dramatic on that one. The price is going sideways, and these diagonal lines will be the next level of support if we reach those. Next, look at BOIL on the monthly. It's still very bearish below the moving averages on the price chart. There's no CCI for it. On the weekly, we've got this bullish divergence, higher lows on the CCI versus lower lows on the price. Now that's still making a bit of a slight move to the upside. Nothing dramatic, but again, I'd like to see the moving averages on the weekly widen. So, for example, like it did back here, to be more bullish. But at the moment, it's a fresh break, and it could take a couple of more weeks possibly to confirm that widening of those moving averages, but bullish movement at the moment, a slight bullish movement. On the daily, we did have this, we bounced off this support at 35.98, and that also aligned with this bullish divergence, higher lows on the CCI versus lower lows on the price, and it bounced, and it's actually bounced quite significantly from there with, you can see there that well above the moving averages of the price, but also above the moving averages of the CCI. And if we go to the intraday charts, you only take trades in the direction of the higher time frame. So if in this case the daily is bullish on both the price and the CCI, you take long trades only on the 1 hour time frame. You can see there it's been hovering around this diagonal ascending trend line as well, and since it's actually broken higher, but it's pulled back in the last few hours of trade, giving us a bearish signal with both the price and the CCI broken below the moving averages. But note, don't go long or short at the moment because the daily is not short, so you can't go short. And we don't go long until we see a break above the moving averages and the price in alignment with the daily, if that happens in the coming hours possibly. Now if we go to that new chart I mentioned, the multiple indicators, you can see the last indicators we saw were back here, the bullish indicators, and that coincided with this bullish divergence. And I prefer to use this multiple indicator as in alignment with the bullish or bearish divergence, like it did back here, and that's where you would have potentially gone long. This would have been a bit too early. Again, I'd like to see the divergence, the bullish divergence in this case, break higher like it did previously, and that's where you buy and then hold on to that. In this case, it bounced off that support and it went higher since then. So for the inverse, KOLD, let's go to the monthly first off. You can see that it's broken below the moving averages, so giving us a bearish signal on the monthly. There's no CCI drawn for it yet, or it's starting to draw. On the weekly, it's actually broken well below the moving average of the price and the CCI, giving us a strong bearish signal. And on the daily, you can see here it's actually broken below this support at 33.95, and it's still dropping. The CCI is still bearish. It's a slight pullback, but nothing dramatic. So we might see further declines in the coming days possibly, so just keep an eye on that. There's no sign yet of a reversal. That's why I haven't moved this support line any lower. So it's actually a bit of a open down there to be further downside. On the intraday chart, again taking short trades only, you can see there we've got a bit of a bullish divergence here. Higher lows on the CCI versus lower lows on the price. So this would probably, again, I'd like to see this break higher on the price. It's already doing it. Moving higher on the CCI, but I'd like to see these moving averages turn up and start breaking higher like it did back here to be more bullish. But especially if I was going to go long, I'd like to see this break higher on the daily to confirm that as well. So just cautionary movement at the moment. Don't go long or short until they both align. In terms of the multiple indicator, you can see there in terms of these peaks below the -2, there was a bearish arrow there, and that was near the top there, and that would have been ideal in alignment with this bearish divergence. Bearish CCI break below the moving averages. And you can see there it's not exactly perfect, but it gives you some level of clarity between the highs and lows, and that was the last high it reached there before, and there's no lows hidden shown yet for a bounce potentially. So for UNG on the monthly, it's broken above the moving average, a very thin moving average range on the CCI. The price is still below the moving averages, so again, some way to go before we confirm that as a bullish move on the monthly. On the weekly, we had this bullish divergence, and that's continuing higher. The price is also moving higher, and again, I'd like to see it break these previous highs, and I'd like to see these moving averages widen to confirm a bullish momentum. On the daily, you can see there the price has been above the moving average predominantly in the last couple of months, and it's broken through this resistance. There's no further resistance sign yet of a break to the downside. This could actually go higher. The CCI is still bullish at the moment, and so is the price. So just caution on that, and avoid going short. In terms of the intraday movement, you can again see here we've got this diagonal trend line. It's sort of hovering near that. Again, it's hit this resistance, so we might see pull back towards this trend line. We've got a bearish move at the moment on the hourly. There's also a higher highs on the price versus lower highs on the CCI. That's a bearish divergence, again we might see it pull back. So if I just get rid of that to clean it up a bit. So if I show you a Fibonacci retrace, assuming it starts pulling back from where it is at the moment, you can see there it's already hit the 23% level. That's a minimum retrace level if I pull it back to that level. But if I took it back to that low, it's actually just touching that 23%, and that'll be our minimum range of a retrace. But again, it may likely go to around the 50% level or 61% in alignment with this diagonal trend line. We'll keep an eye on that and see how it goes in the coming hours and days. Now on the multiple indicator chart, if you're interested in following that, we've got the last bullish or bearish arrow we've got was this peak when it broke above the +2, and since then it's risen and now it's hitting this resistance. There's no sign yet of a bearish break to the downside like it did back here, so we might still have a bit more upside to go possibly. So again, just another indicator to help us track direction of where it may reverse possibly. To support the channel more, hit that like and subscribe button and share the video. For added benefits and the cost of a coffee, consider subscribing to the Patreon page, where we look at weekly scans of bullish trending shares and insider trades that may have occurred. Thanks again, and see you in the next video.